In this episode, we'll be talking about rooming houses, a strategy where you can almost double your rental income from your existing investment property. Okay, so if you want to double your rental income, you want to get to your passive income goals faster, you want to get to your retirement goals faster. If you've heard about rooming houses, but you're not really sure whether they're right for you, or if you haven't heard about rooming houses and you want to see if this can fast track, supercharge your journey to passive income, then continue listening. Okay, guys, so my name's PK and I help people build passive income through property investing, through the Property Investment Accelerator, using data without needing to plonk down $15,000 on a buyer's agent for every single property. And if you're new right here to this channel, if you're brand new, I know half of the people who consume this content are always new, hit the subscribe button. That really helps me, that helps you hopefully as well, because you'll get more and more quality video and audio content on property investing. And give this episode a thumbs up. Give it a like, that way YouTube gives it to more people. That's selfishly really good for me. Hopefully it's good for you as well. Let's get into it. Rooming houses. So what are they? Rooming houses are effectively where you have it's like from the outside, it looks like just a normal residential house. But what you've done is you've converted each of the rooms, each of the bedrooms in that house, up to 5 bedrooms, to be self-contained units. Okay, so they may have a little access to an ensuite, or they have little access to a kitchenette. So effectively, rooming houses are where you can rent each room out separately. When you have more than 5 tenants in a house, that's classed as boarding houses. And of course that can go into the hundreds. I'm not talking about boarding houses here. I'm talking about rooming houses, residential real estate, where it's self-contained rooms. So of course you can have students, but I'm more saying rooming houses. A lot of the demographic that lives here are maybe young people who have moved out of their house, and this is a very common demographic, women between the age of, let's say, 40 or 60. They don't have a spouse, and really it's just a cost-effective way for them to find somewhere to live. They don't need a big house. They live by themselves. They don't want to live in an apartment, because they don't want that sort of apartment vibe. They want a house vibe, and actually sometimes they want to live with other people in that same, house. Even though they're all different rooms, they have that sort of common area, the living room, and it helps their, social how can you say, like, their social element, the social environment, less lonely and all that kind of thing. So there's all sorts of demographics that demand as tenants these rooming houses. And the biggest biggest upside, I'm going to go through 2 upsides, and I'm going to go through about 10 of the gotchas, what you need to watch out for. Let's start with the pros. So the biggest pro of rooming houses, because you're renting each room out separately, you get a much higher rent per week, rent per year, and rental yield. Okay, so let's say you've got a house and it's renting out for $500 a week. Let's say it's a 3-bedroom, 4-bedroom house. If you rent out each room separately, you could get, let's say, $200 per room. Okay, and so 200 times 4 bedrooms is 800. So all of a sudden, you've almost doubled your rental income. Okay, and this is really the crux of it. This is really the essence of why people consider rooming houses. In the UK, it's incredibly common. In the UK, it's called HMO, and property investors rack up, more than £100,000 of passive income net after all costs by doing HMO, because it's a very common strategy there. One of the reasons it's so common is banks like it, and also housing is really unaffordable in the UK, especially in London. All right, London and other places, but especially these big cities, it trumps even places like Sydney, right? So this is by default where people have to live, and therefore property investors, you could say from a capitalistic perspective, you can't blame them. They make the most of that demand, and they configure rooming houses, and within a few years you can rack up $100,000 plus passive income. Okay, so that's really the benefit. This trend is starting to take off in Australia a little bit, but it's just hit a few speed bumps, and I'll explain the reasons why. So there's about 10 downsides of rooming houses. The first downside, if you're thinking about doing a course in rooming, or you're thinking about doing it yourself or hiring a buyer's agent, just watch out for these 10 gotchas. Number one is that the council requirements are incredibly strict. Okay, so it's not like you can convert a 4-bedroom house to a 4 individual rooming house where you can let each of the rooms separately in every council across Australia. Okay, it's incredibly strict, and the reason for that is there's fire safety, regulations. There's so many hoops and hurdles you need to go through to meet the, security, safety, and other environmental, regulations. So these hoops and hurdles often mean that in most councils you can't do this, even if you tried. And even in the councils that you can modify an existing house and give each of the bedrooms a kitchenette, access to an ensuite, have a living room where everyone can come together, separate meters, separate entrances to each of the rooms. Even if you can do that, it's a bit of an onerous process to get approvals. These approvals can cost thousands and thousands of dollars, which make the whole thing cost prohibitive. Makes the whole thing, the business case, just not make sense. Okay, and I should say as well that I personally haven't done rooming houses in Australia, so everything I'm sharing is based on literally dozens of clients who have done rooming houses and then adopt different strategies and work with me. So I learn from their experiences. The Facebook group that I have, where there's more than 12,000 people share their experiences, and I have you could say 10, 15 people who are experts in this space who help their clients do this, that tell me about these pros and cons. So even though I don't have deep personal experience, all of this is based on a lot of authoritative experience and credibility. The second downside with rooming houses is that there's a lot of managing required. Okay, so the property manager will charge easily 10 to 15% plus. Now, juxtapose that or compare that with a normal residential property where you're paying a maximum of 6, 7, 8, 9%, most times, most states around across Australia. So you're paying almost double property management fees. And, the reason is that there's more to manage. The more people that live there, different parties, different tenants, the more issues that arise, the more there is to manage. Okay, so a lot of that extra yield, remember we talked about how a 4-bedroom house you're renting for $500 a week. You're converting it into a rooming house, letting out each room separately. You can get $800 a week, or let's just say $1,000 a week to be, on the high side. The extra property management fees is eating into that additional yield. So that's a downside. Number 3, there are higher costs due to higher maintenance, okay, higher utilities cost, advertising, and insurance. Let's just go through those real quick. So maintenance costs, you got more people living in the same house, so naturally there's more wear and tear. That's kind of understandable. Utilities, you've got more people living in the house. There's more internet usage, there's more electricity usage, there's more water usage, there's more all of that kind of thing. Additional costs for you as the landlord. Extra advertising, on average, every 8 or 9 months, there will be a vacancy. Every 8 or 9 months, there will be one of your tenants. Of course, you've got, up to 5 tenants, but one of your tenants will be moving out every 9 months. So every time that happens, you need to do stuff. You need to advertise for a new tenant and manage that whole process, which takes more cost than a normal residential tenancy, which would come up for renewal every year or every 18 months or 2 years. And then add additional insurance. So there's most insurance providers don't even provide building or landlord insurance. I should say landlord insurance specifically for rooming houses because of the inherent costs and risks that they associate with them. So that means it's hard to find insurance. And even if you can find it, the premiums are so much higher. So all of these things, additional costs, they kind of erode into or eat into the additional yield that you were getting, $500 a week up to $1,000 a week, they eat into it. So it's not quite as good as what it seems on the surface. Okay, number 4 downside is, you know, even if you're not managing the rooming house yourself, you're outsourcing to a property manager and paying them the 15% fee, 15% of your rental income fee. It's still not a passive strategy. It's still active. You still will get on a weekly basis maintenance requests. You will still get on a regular basis the property manager calling you saying there's some sort of issue or maybe even conflict between tenants. Like I said, tenant attrition is high, so you'll be having to vet tenants, more than once a year to find new tenants, and basically just putting out fires. So if you are doing rooming, I would recommend to have a property manager manage your tenants, right? Don't do this yourself, otherwise you've just bought yourself a job. But even if you are getting a property manager to manage your tenants, it's still not a completely passive strategy. Like, for example, myself, and I've shared this before, right here in this channel, I have 11 investment properties, and for me it probably takes, putting aside the tax side of things, probably takes 2 or 3 hours a month to manage. Now, if you had 11 rooming houses, or even if you had 2 rooming houses, that would be, you're looking at least 24 to 48 hours of actual email correspondence, work, thought, every month. So it's more of an active strategy. All right. Number 5 downside is the high tenant attrition. I talked about this before, but I just want to highlight it, especially because most investors, including perhaps you and I, we invest in property for passive income. We want to be able to leave our 9 to 5 in the future. We want to be able to retire once we're 65 or whatever it is with an income, so we're not having to rely on the paltry, I think it's $30,000 government pension, which, by the way, by the time I retire, I'm 32 right now, may not even be there, okay? So, we want to have a steady, reliable, predictable income. With tenant attrition so high, just imagine if you do have this quote-unquote cash cow, this rooming house in your portfolio, after you're retired, you don't need that stress. You don't need a tenant leaving every 6 to 9 months, and every time that happens, your passive income dries up. And if that's your key source of income, after retirement or even before retirement, then that's going to cause some sort of stress, some anxiety, some financial peril. So that's another reason why I don't like rooming houses, or in other words, that's the 5th downside of rooming houses. I shouldn't say I don't like it. I just see, as you can probably glean by now, there's a lot of downsides, which to some extent, in my mind at least, outweigh the positives. But, there's still people out there for whom this might be a viable, valid strategy. Number 6 downside, to really convert an existing house, like we said, a 4-bedroom, normal 2 garage house, let's say 600 square meters house somewhere in Brisbane or regional Australia or wherever, Melbourne, to convert this into a rooming house where each bedroom is self-contained, perhaps it has its own access or at least has its own kitchenette and sufficiently large enough window, all the things that the local council will require. The refurbishment or renovation costs, takes about $20,000. All right, that's kind of the experience from everyone I've talked to, from everyone I've interviewed, from everyone, or all of my research, basically. On average, 20,000, give or take, up or down. So once again, there's this concept of payback period. Okay, so in business and corporate life and anything really, there's pros and cons, there's benefits and negatives. So there's something called a payback period. If you are paying money, you should get a return on that money as soon as possible. So if you're paying $20,000 to refurbish, renovate this house, and the additional rent that you're getting, isn't covering that initial $20,000 for 4 years or 5 years, then you got to ask yourself, is it worth it? You've just bought yourself that additional rent. It's not actually extra financial income. It's not actually additional return on investment. There's actually not, some sort of return there until after 4 or 5 years. Do you get what I'm saying here? So you've spent $20,000. Your income from that property is increased, but that increase let's say it's $4,000 additional income per year. That's 5 years until your initial $20,000 is paid back. So for mine, you've just paid for that additional income, which that payback period just isn't good enough for me. Number 7, downside of rooming houses, hard to sell. Okay, of course, we don't really want to sell our investment properties, and I can hear you say that PK, why would I sell this? It's my cash cow, right? But we still want to buy properties where if, God forbid, something really tragic was to happen and you need to liquidate your assets, not that that would happen every day, but you need to have the ability to do so, right? So if you have a standard residential house, you can sell it any day of the week. I mean, just find the right price, you'll always have a buyer. Whereas rooming house, because it's configured in such a customized, unique way where each room is self-contained, it's not really a house where an average family would love to live because it doesn't look normal from the inside. Everything is, truncated, everything is customized, everything is made fit for purpose for rooming, kitchenette in every bedroom. Like who wants that, right? Or maybe there are some people, but it makes it hard to sell. It's going to make it really hard to sell. And the last thing you want to do is spend another $20,000 making it as it was when you first bought it. Okay, so it's hard to liquidate these assets. And for that reason as well, banks often don't increase the valuation of them because the bank sees what would another person realistically pay for this. And 95% of people in Australia wouldn't buy your rooming house. Okay, so that really handcuffs or handicaps that valuer's ability to value up your property to be able to take equity out. That's, once again, these are all generalizations. Of course, there's always cases where exceptions exist, right? And rules are meant to be broken, but keep this in mind. These are all valid points that you need to have in the back of your mind if you're considering this strategy. Because I know there's a lot of courses, other people trying to sell you this out there on the internet, and they don't tell you all of these hard truths or ground realities. Number 8. So at number 8 downside of rooming houses is it's, way more complicated than a single tenancy. Okay, when I say complicated, I just mean a headache. Okay, I just mean a headache. And what do I mean by that? When you've got multiple people, especially who aren't family members, living in the same, you could say, box. I know they're in different rooms, but still there's a common kitchen as well as their individual kitchenettes. There's still a common living area, common garage, etc. When you have these non-related parties living together, there's bound to be disputes, social tensions. It could be that one person's mining Bitcoin, one taking up too much electricity and internet speed, one person's, I'm being a little bit extremist here, but one person's doing drugs, which obviously impacts everyone else. One person's really loud. They could just have personality clashes. So for us as the landlord, that is a headache. There's not much we can do about that. It's not like we can kick them out because, they've been verbally bullying each other. Like, that's not a cause to be able to kick a tenant out. All right. Nor do we want to kick a tenant out. Like, that's a whole separate, headache. So you get the point, right? This is not one single family, different unrelated people. Sometimes they get along like a house on fire. Forgive the pun, because that's the reason why they wanted to live in a rooming house, for that social environment. But oftentimes they don't, and that's going to be an issue. Number 9 downside is banks don't love rooming houses for their serviceability calculators. I'll give you an example. In the middle of COVID, not that COVID comes around every day, but in the middle of COVID, NAB, one of the big 4 banks in Australia, they came out and said, we are not going to consider any income from any rooming houses when it comes to serviceability calculators. They were just like putting on their super conservative, risk-averse hat in 2020 because of all the stuff that was going on because of COVID, right? Could that happen again? Maybe, maybe not. But we do know that banks will penalize your rental income from rooming houses so that it becomes harder for you to buy more and more property. Even though it's positive cash flow on paper, banks will penalize, they'll truncate it. They might only take 50%, 60% of that rental income in assessing your cash flows and your ability to have borrowing capacity for your next property, for your next property, for your next property. So having a rooming house doesn't actually, even though cash flows can be a bit higher, like I've said before, doesn't actually add to your borrowing capacity. It doesn't actually help you get that additional next house versus a normal residential property. Okay, banks don't like them. And last downside, number 10, is that, really the question is, is rooming houses, will it be a viable strategy going forward? We know this working from home culture, this movement, who knows, maybe, corporates will get everyone, all their workers to come back into the office next year, but it's probably unlikely to happen, right? We're probably likely to see more working from home than ever before. So think about it. Do people need more space in where they live than before? And I think most of everyone who's listening will say yes, because we now need an office or at least an environment space in our rooms or in our houses to have, a desk and do work, have some privacy. Our home has become our gym, our office, our place of sleep, place of recreation, all of that, place of entertainment. So people are erring towards larger spaces in which to live. Rooming houses is just the flip side of that. It's the opposite of that, right? Smaller, tightly contained, more compact areas. And I think, there's a social trend away from them. Okay, so I'm not an expert in social demographics, but number 10, that's my take on it. That's the 10th downside. So to summarize, look, it's for some people, if you can handle those downsides, we know that the gross rents will be double. You can maximize your yield. You can get to your passive income goals faster, but it's a lot of work, a lot of implication, a lot of complication, and that double of gross rents or gross yield is significantly diluted when it comes to net. Okay, and in my mind, the additional net income, net rent, net yield that you get by doing rooming houses is just not worth it on a weighing scale. Additional income versus additional complications, all those 10 downsides, risks, for me, my take, not worth it. So look, I'm just trying to bring you guys a ton of value. Previously on these episodes, we've talked about NDIS and other specialist or specialized types of property investing. Hopefully, it kind of helps you round out your knowledge and to become a master at property investing. And guys, if you did get value out of this, smash the subscribe button, give it a thumbs up, give it a like. That way, these kind of honest truths that you don't find many other places will get out there into internet, wonderland, so to speak. My name's PK, and if you want to step up your learning, join my group below, more than 12,000 people, Facebook group, completely free, all these discussions, SUBURB tips, strategies, all that kind of thing, my podcast link below. And also, if you want to take the next step and really level up and build a passive income, leave a link below to the Property Investment Accelerator. My name's PK, and guys, remember that if it's to be, it's up to me. Take your financial future in your hands. Do it. Bye, guys.